10 News from the world of the crypto industry. First, news. Elon Musk's tweet could trigger a 90% Dogecoin (DOGE) rally. The popular meme coin Dogecoin is receiving support from investors and the market. While the support is not strong, it could contribute to the recovery of Doge's price. Currently, Dogecoin is attempting to turn a significant resistance level into support, which would confirm a bullish breakout. One of the main catalysts for such growth could be a recent tweet by Elon Musk. He mentioned the meme coin once again, this time in the context of a potential position in Donald Trump's administration. Musk stated that he is willing to head the Department of Government Efficiency, abbreviated as DOGE. Musk's tweets often trigger an increase in Doge's value. Additionally, the Moving Average Convergence Divergence (Nyse) indicator suggests a strengthening bullish momentum, hinting at a potential price recovery. However, one of the key obstacles is the behavior of large investors, known as whales. Currently, whales are only minimally increasing their holdings. Over the past 2 weeks, addresses with balances ranging from $100,000 to $10 million in Doge have shown an inflow of just $300 million. The lack of significant accumulation by these major players indicates a cautious approach, reflecting uncertainty or hesitation in the market. This hesitation among whales could ultimately slow down the recovery process. Without their active participation, the bullish MACD momentum may not translate into a full-fledged and sustained strengthening of Dogecoin. Dogecoin is approaching a breakout from a bullish falling wedge pattern. A successful breakout from this pattern suggests a 90% price increase, setting a target of 20 cents. However, the factors mentioned above indicate that the rally may need more time, as the bullish breakout has not yet been confirmed. This will happen when the $0.1168 level turns into support, allowing the price to rise to $0.1286. Nevertheless, there is a risk that the breakout may turn out to be false, as was the case in mid-July. This could lead to Doge's price falling to 10 cents or lower, invalidating both the bullish scenario and the pattern. Second, news. Wyoming plans to launch a stablecoin pegged to the US dollar. The governor of Wyoming has announced plans to launch a state-backed stablecoin pegged to the US dollar next year. The official criticized the U.S. Federal Reserve for its lack of flexibility towards cryptocurrencies. Mark Gordon spoke at a local blockchain symposium, expressing his desire to make Wyoming the first American state to issue its own stablecoin. The token will be backed by U.S. Treasury bills and repurchase agreements, Gordon promised. The governor believes that by becoming a pioneer in launching such a stablecoin, Wyoming could stimulate its economy and cement its reputation as a leader in digital asset regulation. Gordon criticized the Federal Reserve, calling it a brake on innovation. According to him, there were 2 bankrupt central banks in the country's history, the First Bank and the Second Bank of the United States, both of which were abolished by the administrations of the 4th U.S. President James Madison and the 7th U.S. President Andrew Jackson. Gordon stated that the current Federal Reserve is not much better, and Wyoming's proactive stance on blockchain and digital assets will serve as an antidote to stagnation in the federal system. Wyoming will launch its own stablecoin. We will not wait for the Fed to take action. The government's approach to the 2007 to 2008 financial crisis and the subsequent bailout measures left much to be desired. There was a time before 2008 when capitalism really mattered. But Wyoming does not believe in the too-big-to-fail philosophy that has dominated federal policy since the crisis, the governor explained. In March, the governor of Wyoming signed the Decentralized Non-Corporate Non-Profit Associations Act, expanding the powers of decentralized autonomous organizations. In 2019, Wyoming lawmakers approved 4 bills on blockchain and cryptocurrencies. Third, news. Nyse accuses crypto provider SOS of non-compliance. SOS Limited, a blockchain-based solutions provider, received a non-compliance notice from the New York Stock Exchange due to ineffective stock prices. The trading price of its American depository shares fell below $1 for a consecutive 30-day period. By law, SOS must raise its stock price an average stock price above $1 within 6 months, or risk suspension and delisting from the NYSE. Explaining the compliance procedure, SOS stated, "The company can regain compliance at any time during the 6-month remediation period if, on the last trading day of any calendar month during the remediation period, the closing price of the company's stock is at least $1, and the average closing price of the stock is at least $1 for a 30 trading day period ending on the last trading day of that month." The non-compliance notice will not have an immediate impact on the listing of the company's ADS, which will continue to be listed and traded on the NYSE during the 6-month remediation period, as long as other NYSE listing requirements are met. The NYSE will initiate suspension and delisting procedures if, by the end of the 6-month remediation period, both the closing stock price on the last trading day of the remediation period and the average closing stock price over a 30-day period ending on the last trading day of the remediation period are not at least $1. The company's stock price fell 4.13% to 70 cents in pre-market trading on NASDAQ. SOS stock prices reached $1 on May 22 and have since traded below $1. Fourth news. Former TON Foundation executives launched new public initiative. Former directors of the TON Foundation have officially launched TON Society, a company promoting decentralization within the open network. According to a press release, the new organization, working as an offshoot of the TON Foundation, will manage all TON events and official community channels. TON Society is led by Jack Booth, former Chief Marketing Officer, and Ekin Tuna, former Director of Development at TON Foundation. In a written interview with Booth, co-founder of TON Society, he stated that the company had to separate from the TON Foundation to become the voice of the TON community. While many decentralized communities claim to represent the voice of the community, they do little to properly organize it and find true consensus within the community's voice, Booth explained. Origins and approach of TON Society. TON Society originated as a grassroots initiative in 9 global event hubs in Asia and Europe and now aims to encourage active community participation. To achieve this, the company will reward participants in events, activities, and challenges with on-chain achievement badges. These badges help create an on-chain reputation for participants and develop a TON Society participant identifier. TON Society Identifier. The on-chain identifier system will allow participants to unlock governance based on reputation within TON and support TON projects to attract users and foster deeper community engagement. Booth also clarified that the identifier system will be integrated into all aspects of TON Society for various purposes, including membership, event attendance opportunities, and access to hackathons. He added that this will also enable users to participate in some online events and quests conducted with partners, gain posting rights in community channels, and claim giveaways with partner projects. TON Ventures $40 million fund. In a similar development, former senior members of the TON Foundation launched a $40 million fund through TON Ventures, a new venture company. The fund's goal is to support early crypto projects being developed within the TON ecosystem and help investors connect with developers to stimulate innovation and growth in TON. In addition to the financial support provided by TON Ventures, selected projects will also be able to leverage the global resources and extensive experience of the team. Fifth news. Staked Bitcoin on Babylon reaches 1,000 BTC in record time. Just hours after the launch of the Babylon Bitcoin staking platform, BTC worth $60.9 million at the current exchange rate was locked on the platform. On August 22, Babylon developers from Babylon Labs announced the start of the first phase of the Bitcoin staking project, quickly reaching the maximum allowable number of locked coins, totaling 1,000 BTC. As a result, it's safe to say that the first phase of the system's trials attracted immense interest from the crypto community and ended successfully. Babylon's popularity stems from the fact that this service allows Bitcoin to be locked in exchange for rewards for processing transactions in cryptocurrency networks operating on the POS consensus protocol. Stackers lock their coins for a certain period, not transferring them to a third-party crypto wallet but keeping them in their crypto storage with a script. This way, coin holders do not risk losing their savings. During the first phase of Babylon's testing, stackers are not being paid rewards. In the next phase of the trials, startup employees will launch a pass-based blockchain and begin paying dividends to those who locked BTC. Over 12,000 people used the Babylon service, and due to the high number of transactions, miners' earnings per hour increased from 0.5 to 60 BTC, and the average transaction processing fee increased from 74 cents to $7.66. 6. News. Binance Labs invests in 4 projects through BNB Chain MVB program. The BNB Chain team has announced the completion of the selection process for projects in the 7th season of the Most Valuable Builder (MVB) program. The organizers received over 700 applications from various startups, with only 2% passing the rigorous selection process, according to the press release. After a thorough analysis, the team selected 13 participants, with 4 projects receiving funding from Binance Labs, significantly increasing their impact and potential, BNB Chain reported. According to available data, Binance Labs allocated capital to the following startups: Aggregata, which integrates data, computing, and various AI models into a single platform; Opinion Labs, which, according to its official website, creates an infrastructure that evaluates human opinions using blockchain, cryptography, and AI; Sidekick, a hub for consolidating games, social networks, and more; Vui, a cross-chain decentralized exchange aggregator supported by Consensus. These investments underscore Binance Labs' commitment to developing high-potential projects that make a significant contribution to the Web3 ecosystem, the venture organization stated. It should be noted that MVB is a joint initiative of BNB Chain and Binance Labs Venture Division. In November 2023, CMC Labs, the accelerator of the CoinMarketCap analytics platform, also joined the list of partners. According to the organizers, the program is aimed at supporting and accelerating innovation in the BNB Chain ecosystem. Participants underwent a comprehensive training course designed for early-stage Web3 projects. Founders and team members gained invaluable experience and mentoring support from experts, according to the press release. Program participants can take advantage of BNB Chain's Launch-as-a-Service special service package, offering support in infrastructure, security, treasury management, business development, and marketing worth up to $300,000, the team stated. 7th News. AAVE token outperforms the market, rising by 45%. AAVE, the native token of the decentralized platform crypto AAVE, has increased by more than 45% to $135 over 4 weeks, outperforming all other top 100 cryptocurrencies by market capitalization, including market leaders Bitcoin and Ethereum. According to CoinGecko, investor bias towards AAVE is so strong that Helium's HNT ranks second with a much lower 26% price increase. AAVE's price rally began in late July after Avechan Initiative founder Mark Zeller proposed switching the fee to distribute part of the platform's net surplus income among key ecosystem participants and buy back tokens on the secondary market. There was speculation that AAVE might activate its fee switch to redistribute the surplus income generated by the platform among stackers. This followed a proposal seeking feedback from management on the protocol's potential to buy back tokens using surplus income and redistribute them among AAVE stackers and GHO stablecoin developers, said Joshua DeVos, head of research at London-based asset data and index provider CoinDesk CC Data. This has improved market sentiment towards the project and also opened up new opportunities for incentivizing AAVE ownership and staking, added Voss. Another proposal called for replacing the seize and sell loan liquidation process, which negatively affects AAVE's price, with a seize and burn mechanism that uses GHO AAVE's stablecoin and A tokens representing assets deposited in the protocol. According to Katie Talati, head of research at Arca, this so-called umbrella proposal could ease selling pressure on AAVE in the market. The proposal aims to create a new system called Umbrella, which will use various assets to cover bad debts in the protocol, when a position is liquidated, and the collateral does not cover the liquidation cost, instead of using only AAVE tokens to cover bad debts. Thus, the new system will alleviate some of the selling pressure on AAVE, Tolati said in a note at the end of July. Web3 agency DLabs explained on X that buybacks would create sustainable bullish pressure in the market, while Umbrella would eliminate the negative impact on AAVE's price during loan liquidations. This is just a superficial view. There's much more to this proposal, said DLabs. According to Wintermute, an algorithmic trading firm, these proposals aimed at revising AAVE's tokenomics and protocol risk management have stimulated institutional interest in the token. Discussion of the tokenomics update attracted more attention to the protocol back in July, and it is generally seen as a blue chip, a DeFi asset that tracks the growth of crypto overall. Additionally, significant funds were allocated, and research notes were written for investors, Wintermute told CoinDesk. We also observed similar off-exchange flow from institutional counterparties looking to gain exposure, Wintermute added. AAVE also ranks as the top protocol by revenue and fees generated over the past 4 weeks. According to data tracked by Token Terminal, AAVE generated more than $27 million in fees, outperforming other lending and borrowing protocols. As a result, some in the crypto space believe that the token is undervalued. 8th news. Ethereum funds cash out, marking record outflow in the U.S. Ethereum exchange-traded funds, ETFs, in the United States have experienced the longest outflow streak. From August 15 to August 21, the funds lost $92.2 million over 5 consecutive days. This is the most significant outflow period since the ETF's launch on July 23. In particular, the Grayscale Ethereum Trust is the main player in these outflows, with $158.6 million withdrawn over the 5 days in question. The Grayscale Fund made daily payments, except on August 12, which showed that investors remain concerned. Other ETFs, such as BlackRock's iShares Ethereum Trust ETF and Fidelity Ethereum Fund, also saw some inflows. However, this amount was insufficient to counteract the outflow. Despite the significant outflow, the Grayscale Ethereum Trust has not experienced any outflows since its inception. During this period, the company had a positive cash flow of $231.9 million, which is a way of adapting to the overall situation. However, the overall effect of the outflows is that all Ethereum ETFs have a net negative value of $458.5 million. Bitcoin ETFs secure $17.5 billion despite GBTC outflow. Meanwhile, while Ethereum ETFs are struggling, Bitcoin ETFs in the US remain surprisingly stable. Since their launch in January 2024, Bitcoin ETFs have attracted a net inflow of $17.5 billion. This is despite the Grayscale Bitcoin Trust recording an outflow of $19.6 billion. On August 20, ETFs attracted $88 million in capital, the highest figure in 2 weeks. IBIT, BlackRock's iShares Bitcoin Fund, added $55.4 million in new investments, bringing the total investment since January to $20.5 billion. Ethereum ETFs struggle for stability as Bitcoin remains steady. The performance of Ethereum and Bitcoin ETFs shows that investor sentiment and global trends differ. While inflows have decreased in recent weeks, interest from major companies like BlackRock and Fidelity in Ethereum ETFs suggests a long-term focus. However, short-term consequences due to market volatility and regulatory uncertainty have led to numerous withdrawals. On the other hand, investor inflows into Bitcoin ETFs point to the original cryptocurrency as the preferred choice during periods of volatility. As Ethereum ETFs continue to face these challenges, the market will be interested to see if they can regain investor confidence and return to an upward trend. 9th news. Sony to launch Sonium L2 network for Ethereum ecosystem. Sony Block Solutions Labs, a joint venture between Sony Group and Singapore-based Stardale Labs, has announced the launch of the Sonium Layer 2, L2, solution on Ethereum. Sony Block Solution Labs is developing the Cenium L2 solution. This is a public blockchain with an open network that serves as the foundational infrastructure for Web3. Users will be able to access Cenium through applications, interact with Web3 games and NFT marketplaces, as well as entertainment services, the company's press release states. According to available information, Sony will release the L2 protocol based on the OP-Stack software suite from Optimism. In the coming weeks, the team will present technical documentation and developer tools. According to the press release, a test network, developed in collaboration with the Asta Network blockchain platform, will initially be made available to the public. The collaboration will allow the integration of Asta's zkEVM assets and infrastructure with Cenium, providing initial liquidity and supporting certain digital assets. The announcement states that the Cenium L2 protocol aims to address key challenges such as scalability, security, and decentralization. At the same time, the team wants to make it as user-friendly as possible. Rumors about Sony's potential blockchain development first surfaced in September 2023. 10th News. Investors drive sharp price surge. Polygon's native token, Matic, recently reached a 60-day high, partly due to a significant 28% price increase last week. This price increase is driven by investor anticipation of the upcoming token swap from Matic to Pol. Currently, Matic is trading at 52 cents, showing notable whale activity, which has played a key role in this price rally. Increased whale activity, what does it mean? Recent data from Into the Block shows a 43% increase in net flow among large token holders. These large holders, who own more than 0.1% of Matic's circulating supply, are important indicators of market sentiment. When their net inflow increases, it signals accumulation by whale addresses, which often precedes a bullish market. This accumulation by large investors instills confidence in individual investors, encouraging additional purchases and supporting the upward price momentum of Matic. Essentially, as whales buy more tokens, smaller investors follow suit, driving up the price. Why are futures investors optimistic? Futures investors in Matic consistently demonstrate a preference for long positions, reflected in the altcoin's positive funding rate since August 17. A positive funding rate implies that investors are willing to pay a premium to maintain bullish positions, signaling overall market expectations of price increases. These bullish sentiments among futures investors further support the positive price movement as more market participants bet on continued growth rather than a decline. Key takeaways for investors. Watch for whale activity as a bullish indicator of potential price growth. Positive funding rates in the futures market suggest sustained investor confidence in price increases. Monitor directional indicators. A strong ADX and higher plus DI than DI may signal strong bullish trends. The average directional index, ADX, for Matic, calculated on the daily chart, confirms a steady bullish trend at 48.17. This indicator, which measures trend strength regardless of direction, suggests that the current upward trend is strong. The token's directional movement index setup also supports this. The positive directional indicator is above the negative directional indicator, indicating dominant buyer pressure. Maintaining this trend could push Matic's price to 55 cents, although profit-taking could exert downward pressure, potentially lowering the price to 33 cents.